So now I want to talk about something new in accounts receivable ledger. Instead of having one accounts receivable ledger for all my customers, each customer has a subsidiary ledger. But this way it's easier to keep track of who owes me money, when they pay it to me, and when they owe it to me. So each customer has their own individual account number. And so I'm going to have a total of however many customers I have, each one will have a subsidiary ledger. And when I add up all the subsidiary ledgers, they will equal to the accounts receivable, which is a controlling account. These are just the instructions. So let's take a look here. So each customer here, Lorenzo, Myers, each one will go into their own actual account. So here is Lorenzo's subsidiary accounts receivable ledger. Here is Brenda Myers. When I add them up, they're going to equal whatever's in my accounts receivable. So this is just, now it's easier for me to keep track of each customer, how much I sell them, and when they owe it to me. This is really about understanding the relationships. Relationships, you need to remember that, again, the total of the accounts receivable ledger balances should equal the master controlling account at any given time. And the accounts receivable ledger is nothing more than a detailed list of all the customers summarized. Okay, now let's look at how to deal with sales returns and allowances. So when customers return things to me, so in this case, Coots is returning $48.30, but of that was $46 for the product and tax. So the same thing again is I'm going to have an actual subsidiary ledger. Let's take a look. It's right here. So here is Coots's actual subsidiary accounts receivable ledger. And that also will be posted to the accounts receivable. So I'm posting here and here. I hope this makes sense. Next, let's look at how do I deal when I take a bank card or an ATM card. So most credit card sales are very much like cash. In reality, you as the business owner will have the money usually within 24 to 48 hours, almost always in your account by the end of the day. Kind of like when you use your ATM card and it takes out of your account that same day, but it'll process that night. Well, it goes into the business owner's account that same day and processes that night. Sometimes with an actual credit card, there's a fee based on the gross amount of the sale, and that does include sales tax. So let me show you how to journalize bank card transactions. So on a sale of $100 plus sales tax of $5, the credit card fee at 4% would be $4.20. So here's how I calculated it. And really, every credit card, any vendors that take Visa, MasterCard, Discover, American Express, they have to pay a fee. So often it's built into the price. So here's the actual cash I'm going to get because I'm only going to, let's go back. It's $105. So that's the total amount I would normally get. But after I pay the bank card expense of $420, I'm only going to end up with $100.80. My sales is still $100 and my tax payables is still $5. So remember, the total cash you're going to get is going to go here, but you have to back out what it costs to run that credit card. That's why many businesses would much rather you pay cash than use a card. But in today's world, we all live with our cards. So this concludes video number 4 for chapter 10, accounting for accounts receivable subsidiary.